Paras, afternoon. Thank you so much for your time. First of all, I want to understand the way you are approaching the market right now. We were reading select kind of notes this morning, strategy notes. Some are asking for caution, others believe earnings will be good. What's your approach right now in this current market setup?
Look, as far as the economy is concerned, we are on a very strong footing. And look at any which way. It's clearly visible that the economy is led by investments and the government capex, which has happened, has spurred a new growth momentum to the economy. And at the same time, if you look at the market also is reflecting the broader sentiment, what is there in the economy. There are certain pockets wherein you are seeing that some kind of cyclical downturn is visible, maybe in the rural space or the consumer durable space, or for that matter, in the chemical space. But overall, if you look at, things are looking very bright, and some of the segments have done exceptionally well. And our sense is that this momentum will continue going forward as well. Because if you look at maybe in 2024, interest rates are about to peak out. And once they comes down, that's going to be a key positive. And plus, the most important imponderable probably is going to be the elections. So if the present government comes with full force, then that again is going to give a very solid momentum to the market as well. So net, one needs to be very careful in picking stocks, but at the same time, the sentiment remains very strong. And we are at the cusp of a very strong upcycle in earnings as well. This is what it seems at present. Yeah.
Paras, you're at the middle of a fundraise as well at Ashika India Alpha Fund. When you're talking to your big clients, interactions, what's the messaging right now? How is your portfolio management strategy be different at this particular fund of your, the Ashika India Alpha Fund?
So this is Ashika India Select Fund, more importantly. Now the thing is, what we are doing is that we have picked up sectors and themes where we think that the structural tailwind is there. First of all, about Ashika India Select Fund, this fund is going to be a long only and a sector agnostic and market cap agnostic fund. Our thought process has been that to pick up businesses at right valuations that will give us the comfort, or will help us in mitigating any kind of downside risk which comes to the market. This is number one. Second is picking up companies where there is more on solid earnings, or you can say it this way, that the momentum in terms of earnings are clearly visible, and there is a structural tailwind in the sectors with able management, and there is some kind of competitive advantage with the company where the EVS spread is also quite good. So those are the kind of things we are going to pick up. And bottoms up, why I say so is because that we have seen that there has been a scorching pace in terms of the market rally is concerned, or whether you look at any of the sectors or the stocks, they have rallied a lot. So the most important thing at present, what we think of is picking up companies at right value and with a sectoral tailwind, and they are structural in nature, and that will help us a lot in mitigating any kind of risk which comes up in future with regards to volatility in the market. So that's the primary thought process. Second is with regard to themes and sectors. We thought of themes and sectors which are going to be there. Say the visibility is there from a 5-year perspective, and some of the themes continue to be there for last many years as well, like formalization of economy or financialization of savings, or the consumer discretionary probably, which has taken a backseat for last couple of quarters and years. That is going to come up because the demographic profile of India is such that that need to play out over a period of time, and nobody can stop it. If you dissect deep into the demographic profile as well, you will see that 40 crore kind of population is below the age of 20, and the working age population is 29. That will come in working force. And other thing is financialize finance sector as a whole. Probably that's going to be a big theme to play for. Healthcare again is going to be one big. Technology disruption, manufacturing, exports. These are the broad themes where we think that the structural
Right.
tailwind is there. and probably we'll be picking and choosing from those sectors and themes
Right.
what I highlighted.
Paras, so I want to understand from you that at Ashika Select Fund, which you are in the middle of launching, what will be your risk management style? Because, for any fund, management of risk is as important as generating returns. You have been a conservative house historically. How important would that be? Because I'm sure you'd be looking at a 3 to 5 year period for this fund for reasonable return expectations. So, how important is risk management for you?
Risk is very important, and this is the most important thing when we have to. We are hard pressed to think in a market like this. So, what I initially highlighted about the fact that we'll be picking stocks, whatever the promise that stocks or sector holds. The most important thing is right value, because if I have the right value in place and there is earning momentum which is going to be there for the company and we see the visibility of that, sooner or later prices are also going to match up to it, because at the end of the day price is a slave of earnings. So we will not be going by any kind of narratives as such, or most of the hopes built into the stock, rather than we will look for companies where there is a complete track record for last many years, and the company have visibility and they have solid earning base with capable management. That will be the thought process, and it's very difficult to time the market. So instead of timing the market, we think of giving time to the market and to the stocks or the ideas which we invest in or select companies we invest in. So we'll be deep diving on those companies and having a good hold on the earnings. And where we find comfort with the earnings, these are the companies we are going to bet on, provided the valuations are reasonable. At the same time, we will not go with narrative. So that will, in a sense, mitigate a lot of my risk with regard to whether it is errors of omission or whether it is regard to error of commission. So that's the primary thought process we have in mind. And the rest all is market will take care of companies where the earnings are there and the visibility is there. And if there are structural tailwinds with a lot of things happening in the economy, then probably we are set to go. And sooner or later, they will deliver the kind of returns what the earnings
Paras, we are
momentum
also
is.
at the start of the third quarter earnings, which are just starting to come in. In fact, early trends in Q3 updates have also started. You will also look at earnings very closely. What kind of earnings, some minimum threshold would you have in mind, quality of earnings, while stock picking at the fund, in terms of your philosophy on earnings?
So, look, as far as first of all, to give a clearer picture about the broader trend, what India INC or the corporate India is uh, witnessing at present, is that for last many years, corporate earning as a percentage of GDP has turned around. And the important thing is that this corporate earnings to GDP has peaked out in 2008 cycle. And after that, we are seeing that earning again picking up. So the quality of earning is improving, no doubt about it. And that has a larger impact on the uh, ROEs and ROCs of the corporate India as a whole. So that gives some kind of premium to the valuations of Indian market as well. So that is one thing. Now, sectorally, if you dissect and look at companies, you will find that there are certain pockets which are doing exceptionally well, whether be it railways, whether be it power as a sector which has come up after 12, 15 years. It since 2008, now things have started catching up, and the demand supply situation we all know about it. So that is one, and all the ancillaries related to power is one thing which is picking up pace after a long time. This is one sector which has revived, and the earning momentum is also reflecting the same. And look at capital goods. Capital goods again is a sector which has not done well for a long period of time, but since COVID, post COVID, and with the kind of capex we have seen, capital goods as a theme also have started doing exceptionally well. Last time we saw a extraordinary rally in the capital goods segment was in 2008 cycle, and post that after a long consolidation this has come. So earnings are there, and now if you look at start mapping the earning of these companies after long hiatus, they have started performing. So it's not going to be a 1 or 2 year affair for these companies. They tend to stay a bit longer. And add to it the real estate theme or the pharma space, which is again started picking up, or add to it the industrials or companies like in the EMS space. They are all doing really well. And some of the themes and sectors just after the COVID, which started doing exceptionally well, has taken a backseat to some extent, maybe chemicals or and other names. But at the same time, this China plus one theme is yet to pick up and yet to get reflected in the exports of India INC. But the kind of policy framework which is there and the kind of strength which is getting unleashed by corporate India, probably once the capex, private capex starts picking up, you will see lot many things gaining in terms of momentum. So earnings, of course, utilities, industrials, to some extent, pharma, last quarter pharma did exceptionally well, and probably the raw material prices have started coming down, is aiding to the margins, and last quarter was a stark improvement in the margins. So that will continue. And the domestic pharma branded generics and to some extent in the diagnostic space as well, that is one theme, probably they will do well. And banking, again, if you look at the early indicators and the numbers, you will find that most of the banks are also showing strong momentum. And mind you about the fact that financials, if you talk about Indian GDP from 3.6 odd trillion to 8 trillion by 2030, and 50% of GDP is just credit, and in the advanced countries it's 100%. Think of it, the runway which or the contribution which financials also need to play in this space once the country grows. So that again, the momentum continues and the advanced growth remains quite strong. And capital goods again probably will continue to do well. So these are some of the themes and sectors which come to my mind where I think that will continue to do well. And add to it that consumer discretionary or consumption, which has not picked up or done so well, probably early green shoots may well be seen with some of the companies. One of the company talking about that margins are improving and volumes are.
Right. All right, Paras, thanks very much for joining us with those thoughts on market and your strategy at the Ashika Select Opportunities Fund, and also good luck for your fundraise. Thank you very much for your time this afternoon.